So this week we saw the Chinese yuan fall almost 4%, and that sparked a lot of volatility throughout the region, including in the currencies market, from the Korean won to the Malaysian ringgit. Anjani, what does it mean for these countries that their currencies are getting even weaker?
Weak currencies often mean two things. It means growth of exports for these countries in the global marketplace, and it also could mean rising inflation at home, which is a good thing, especially because we are in a broadly deflationary environment. Now, there are countries like South Africa where the perfect storm is brewing. Inflation is rising, the currency is at a 14-year low, growth is weak, and policymakers are struggling to actually figure out what the right policy is.
I mean, that's one of the key reasons that China wanted to devalue its currency, right? What kind of positive or negative benefits is China going to get from this?
A weaker currency, of course, helps Chinese exporters, and that's been China's bread and butter for the last 2 decades. But on the other hand, it's part of this wider financial reform and financial liberalization process. And making Chinese goods competitive in the marketplace was never an issue. So this is more a domestic story in China than it is really about the global marketplace. And of course, because these countries in emerging markets have for years been so dependent on China, they're only set to suffer. And people are now saying that central banks will have to probably act more aggressively to help their currencies continue being competitive against China.
So in China, for example, if the domestic consumer is facing a declining currency, they're going to be buying less goods at home and abroad. What kind of broader economic impact does that have?
The fall of the Chinese yuan has not been that large. When you compare it to other currencies and what happens in currency markets, the fall of the Chinese yuan has only been 3%. Today, again, they stabilize the currency. So they will continue to maintain a tight grip and before we see any wide-reaching impacts. And it has caused pressure because it has hit investor sentiment. But beyond that, we really have to see the currency move a lot before it'll trickle down to consumers in China.